Amazing. Well, Alan, so great to finally meet you. I know we've chatted via phone a couple times. So how are you today?
Oh, doing great, doing great. And wow, Valentina really knocked it out. Some amazing information. And
Yes.
thanks to you for putting on this amazing summit. I mean, there's so much great information, so many good speakers, so many people are interested in knowing about what all their different options are. And this is just a fantastic forum for it. Thanks so much for putting this on.
I really appreciate it. And yeah, so guys, I'm really excited about this panel because we are going to be talking about expat taxes with Greenback. And I want to give you a proper introduction, Alan. You're calling in from the state that sounds like where I live, LA, but Louisiana. And Alan has been working almost exclusively with expat since 2013. He's lived in South Korea for 10 years and Denmark for 2. And so he is no stranger to the expat lifestyle, which is why I wanted to bring him on, because it is very important for the person you decide to partner with for your taxes to understand what the expat life is all about. And he does. And this is why I think you're just a perfect fit for everybody that's going through this. In
Okay.
addition to understanding the intricacies of expat tax preparation, Alan excels at guiding individuals through the IRS audit process, leveraging his 7 years of experience as a corporate auditor. So thanks for being here, Alan. Can you kind of give me a little bit more background as to like what you do at Greenback? And I'd love to ask too, has anybody figured out the whole tax situation for moving abroad? Put yes or no in the chat so we kind of can get a feel if this is like a whole. Okay, great. I'm seeing a couple no's. So Alan, yeah, tell me a little bit more about what you do at Greenback.
Okay, well, I'm a CPA. And at Greenback, what we do, we're a specialty firm and we basically help expats. We focus on all of the international issues. So if you have any type of US tax situation you need to deal with, whether you're an American living abroad or living in America or a non-American in the United States, or if you have a business or rental property in the US, any and all US and state tax situations we can help you with. So we've been in business for over 14 years and we've been 100% virtual since day one. All of our accountants are either CPAs, enrolled agents, or attorneys that have 3+ years international experience. So we're all very well versed in it. And if you look at a lot of our online reviews, like through Trustpilot, they look so good that you might think they're fake, but they actually are that good. All of our reviews, those are real reviews. And part of the reason is when you work with us, you have one single accountant that's dedicated to you, that you speak with, that you email with, that goes through all of your information, that prepares your tax returns. So it's just one point of contact that you have. You don't have to worry about calling a big office and someone trying to figure out who you are and what your situation is. It's that one-on-one personal service that really helps make our firm stand out.
I love that. Thank you so much for sharing. And I kind of want to hear from you because like before we jump into the juicy tax questions, I know you lived abroad. So what was your experience like when you were specifically in Denmark and South Korea, and your experience navigating, taxes back home and that whole realm?
Oh, well, it kind of all started for me back when I was living in South Korea. I was working as an accounting professor for Southern New Hampshire University. They really are a great university. And, a lot of it is I come to realize a lot of people didn't know that as Americans, you actually have to file tax returns no matter where you live in the world, which is a pretty unique thing. There's only a few other countries that have taxation by citizenship. That means if you're a citizen, doesn't matter where you are, US, North Korea, and I think Eritrea in Africa, small country in Africa. But most countries, it's all residency based. So that means, if you're living there, then yes, you file and pay taxes. But if you're not living there and you don't have any income that you earn from there, for example, you don't own any rental properties in that country or business, you're completely out of the system. So a lot of what we get every week is people contacting us, not knowing that They had to file taxes. They're worried about it. And there's a couple of really special amnesty programs that can really help if anybody's in that situation where you basically file for the last 3 years. All of the past years are forgiven. And, all the penalties for those current 3 years are also pretty much waived as well. So glad to speak with anybody about that if they find themselves in that situation.
Wow, thank you so much. And one of the main questions is, yeah, what are some of the requirements? Can we kind of jump into those requirements as Americans? I think we do have a Canadian that I've seen in here. Do you guys do Canadian, or is it mainly US the focus?
Oh, well, we just do US and US only. We also hold consultations as well, if you want to deep dive into anything. But we do have some sister companies. One is actually in Canada, Benson CPAs. They're a great firm. We have one in Germany and one in the UK as well.
Okay,
That
awesome.
I refer you to.
Okay, great. Thank you so much. So can you kind of paint that picture for us of the requirements?
Sure, absolutely. And, even though I'm here talking about specifically US tax situations, if anybody wants to put some questions in the chat, or if you just kind of want me to talk a little bit how a lot of tax systems work in general, I'm glad to kind of do that just to make sure everybody gets something from this conversation. So with that in mind, most places in the world, you have to earn a minimum amount of income before you're required to file a tax return. It's exactly the case in the United States. Okay, so what is that minimum requirement that I have to be able to file, to be required to file? Well, it depends on your income, basically your filing status. And if you earn more than what's called a standard deduction, then you're required to file a tax return. So that's the standard deduction depends on if you're single or if you're married, filing jointly, or head of household. So basically, if you're single, if you earn more than about 13,000, if you're head of household, if you earn more than about 18,000, and if you're married, filing jointly, if you earn more than about 27,000, you have to file. Those standard deduction amounts, those amounts increase a little bit year. They're fixed amounts, but there are some special cases here. And one is if you're self-employed, or I believe, like what Valentina said, autónomo in Spanish.
Yeah.
So if you're self-employed anywhere in the world and you earn more than $400, you're required to file a tax return. Okay, and that's one of the things that sort of surprise a lot of digital nomads. They don't think they have to pay income tax, but they're on the hook for self-employment tax. We can maybe discuss that a little bit later. But another thing, which is, I couldn't believe the very first time I saw it either, is if you're married filing separately, and we see this a lot for people who are, living abroad, and they're married to someone in their country, someone who's not a U.S. citizen. If you're married filing separately, and if you have income of only $5, you're required to file a tax return. I mean, in my mind, $5 is completely ridiculous. But those are the rules that Congress has seen fit to saddle us with.
Wow. Incredible. So thank you for sharing all of this. And if you guys have any other questions regarding taxes, please drop them in the chat. So are there any tax advantages for American expats abroad? Can we talk about retirees first?
Sure, absolutely. Well, the main benefits come from working, having a salary or being self-employed. But there's still some benefits for everyone, even if you're retired or not working, whatever. And that would be the foreign tax credit. Okay, so if you're living in another country and you're paying income tax to that other country, you can use that tax that you paid to reduce your US tax bill, hopefully down to zero, using what's called a foreign tax credit. And so that would be the main benefit for retirees. If they have a rental property or investments or different things like that, to pay some local income tax.
Okay, got it. Now, what about tax advantages for American expats who are business owners or working remote? Can you kind of speak to what that process would look like?
Yeah, absolutely. And the main benefits are the income tax benefits, not the self-employment tax. So everyone can take advantage of the foreign tax credit if they're living abroad. The key is you have to be living outside of the United States. and you earn any kind of income. So again, the foreign tax credit is just, having to pay tax to a foreign country and using that to reduce your US tax bill, typically on a dollar for dollar basis. Not always, but in general, that's kind of how that works. So there's another advantage if you have earned income. So there's a lot of different definitions of income. One is earned income. And earned income is salary, wages, bonuses, tips, any or self-employment income. So anything working as an employee or as a self-employed person. So if you have that type of income, you can claim the foreign earned income exclusion. So that basically means, if you have a salary of 60,000 US dollars, you add it to your US tax return, you have to include all of your income, and then you're allowed to exclude that amount. Now, there is a limit, and for 2023, that limit is $120,000. So basically, you could earn up to $120,000 overseas and completely exclude that from being taxed whatsoever. Okay. Now that foreign earned income exclusion, that amount increases a little bit every year. And there's another benefit called a foreign earned income exclusion housing exclusion. Though it's not so generous, but if it's available, take it. Those are for people who are renting, and basically you have to have a rent of over $16,000 a year. So more of the high cost of living areas. If you don't mind just adding one more thing, if you happen to be lucky enough and you earn over $120,000 or whatever the foreign earned income exclusion is, then any amounts above that, any income above that, you can also apply the foreign tax credit. So a lot of people that we deal with in the UK and France, Germany, high cost of living areas, they wind up paying actually no US income tax whatsoever because of the combination of the foreign tax credit and the foreign earned income exclusion.
Okay. Thank you so much. This is so informative. I always love these chats because this is a wheelhouse that is very intricate, and I'm just so happy you're here to clear up a lot of our doubts. Monica asks in the chat, is there a way to establish residence in a state without income tax, without actually moving there? I've seen a lot of people do this before they move abroad, as they want to establish residence in a different state. For example, they'll move from California to somewhere else. Yeah, what's your experience with that?
In general, once you leave a state and you're out of that state and you don't have any income that you earn from there, like a rental property or a business or something like that, then you're generally out. Now, if you have like a bank account that earns a little interest or an investment account, those generally don't count. Basically, for the most part, when you move out of a state, you leave, you're done, you're good. But there are a couple of sticky states, California and New York, Virginia, Colorado, Minnesota, surprisingly, that are a little hard to get out of. So if you're more of a net worth individual, what you might want to do is actually get out and establish residency in another state and then move from that state abroad. It's not always necessary, but in those cases it might be. So what I've heard is the easiest one is with South Dakota. You can just spend one night there and claim residency. You can even register a vehicle and get a license plate. Apparently there's a lot of Americans in Mexico with South Dakota license plates.
Wow.
But if you're coming from a state like California, you should probably have a consultation to discuss how to break that residency, or New York, specifically if you own any property or lease any property in New York State, especially New York City.
Okay. These are such good tips. I love it. I've seen people do that as well, because obviously in the digital nomad space, having your own business, having friends that have left America, moved to Mexico, Costa Rica. Yeah, people sometimes do that. They'll move to a different state just for a day, like you said. So we do have a question from Carlos. Very good question, Carlos. Do I have to pay taxes on Social Security earnings if I live abroad?
It sort of depends. So if you're an employee and you work for a US company, you're going to have to pay Social Security tax. That's 7.65%. That's for Social Security and Medicare, regardless of where you live in the world. Yeah, that should just come out. Now, if you're an American and you're not working for a US company and you're outside the United States, and in a lot of cases, this could be like a foreign subsidiary of a US company, then you don't have to pay that 7.65 Social Security tax. Okay, but you are probably going to be paying a local tax similar to that. There's a lot of countries that have that. When you're self-employed, it's completely different. So when you're self-employed, it doesn't matter where you live, you're generally on the hook for that Social Security tax. And what a lot of people don't realize is, they see that 7.65% come out of their check when they're working in the United States, but they don't know that their company also has to match that 7.65%. So altogether, that's 15.3% that's paid. When you're self-employed, you're considered the employee and the employer, and you have to pay both of those portions, or that 15.3% on your profits from self-employment, which is a big surprise to a lot of digital nomads. Now, there are some cases where you could be working in a certain country, a country with what's called a totalization agreement, and a lot of these are in Europe. And that agreement basically says, okay, if you're in one of these countries and you're paying the US equivalent of Social Security tax in that country, France, UK, Netherlands, or whatever, then you're exempt from having to pay that also to the US. So it eliminates that double tax.
Okay. Thank you so much for going into that detail. And I hope that helped answer your question. From Mohammed, we have another question. I love these questions, guys. Feel free to keep asking, because these are real questions from your lives. So, hi, is end of service gratuity taxable income? End of service gratuity taxable income. Do you know about that?
Well, I haven't heard of it as called gratuity, but I guess it's just basically a severance payment. Muhammad and everyone else out there, basically the way the US law is written is if you want a deduction or an exemption or exclusion, it has to be specifically stated that you could do that in the law. Versus income, where it says, well, everything is income unless we say it's not. So by default, anything that you earn or that you get for work that you do is going to be taxable, including the year-end severance, gratuity, including if your company that you're working overseas and your company pays for a car for you, or if they pay for your apartment, or if they pay for your children to go to school, all of that is taxable income, technically.
Okay. Thank you so much. Yeah, I hope you're okay with these rapid fire questions.
Yeah.
I'm really putting you in the hot seat, Alan.
No problem. No problem.
Seems like you've done this before.
I do a lot of consultations all the time. So
For sure. I love it. So Julie's asking, she's retired, drawing a retirement income, however, also has a K-1 that she has to file each year. Is that going to make her situation more difficult?
well, potentially. So a K-1 is similar to like a W-2 for everyone out there, or a 1099. It reports the income that you have, but it reports income for a partnership. And some partnerships could be pretty easy. You basically have, maybe it's one piece of a rental property and you have some rental income. Other ones could be complex businesses, and there could be a lot of tax aspects out there. So it really depends on the partnership interest in that business that you own. But that is income. You do need to report that. Anyone with those knows that a lot of times K-1s come in very late, especially the last few years when there's a lot of changes. That's always typically very frustrating. So in that case, you really want to try to stay on top of your tax situation, try to get as much done as you can early as possible, especially if you know you're going to be waiting for that K-1, and hopefully it won't come too late.
Okay, thank you so much. And I actually have a question. How early should people be planning their taxes before their move? Having a consult with you guys or working with a professional. I'd like to know too in the chat, like what is your guys' timeline? When are you planning on making the move? If you can let us know so that we can maybe touch on timelines for getting everything set up. What is your recommendation with that, Alan?
Well, I mean, it sort of depends on the individual, but basically, before you move, so you know what you're getting into. If you're at the point where you're pretty set on going, well, then you're going to want to know, how taxes could affect you. So, for example, I was talking earlier about the foreign tax credit and the foreign earned income exclusion. Well, if you have children, you probably want to claim the foreign tax credit and not the foreign earned income exclusion, because if you claim the foreign earned income exclusion, you don't get the child tax credit, and that's worth up to about $2,000 refundable per child. And it also depends on where you're going to be living. Is there a tax treaty? Is there a totalization agreement? What are the local tax rates? What your plans are for the future? So it's a little bit hard to say. I would say if you're looking at moving abroad, make that decision first, whether you're going to go yes or no, whether you're probably going to go yes or no. And then once you're at that point where you're going to be moving someplace amazing, then that's when you're going to want to talk to someone like me and help start planning things and make sure you do things carefully and you know how things are work. And you're not going to be like a lot of digital nomads that they're surprised by having to pay the self-employment tax, or a lot of people also that they're surprised to find out that they actually have to file tax returns once they've moved out of the US.
Okay. And I'm going to be dropping a link here shortly, guys, with how you guys can get in contact with Greenback. Basically, there's going to be a tax prep price estimator in there, and like pretty much how you can start on your US expat journey. So I will drop that in here after I get Llama's question answered. Hey, Llama, thanks for being here. So Llama is looking to move to Denmark, which is where you lived. So I know that in this chat, we can't specifically be giving out tax advice for all these different countries because you are specialized in US taxes. But Llama says, I'm a self-employed planning on moving to Denmark this year and would love to know how to handle taxes, especially since that country is notorious for really high taxes. Can you talk for a minute about being an American in Denmark and even potentially just the rest of Europe, which typically has very high taxes?
Yeah. So I love living in Denmark. It was great. The people seemed a little bit cold at first, but they're really not. It just takes a little bit of time to get to know them. It's incredibly safe country, very beautiful. Didn't have a car. I had a bike. I took it everywhere. There were beaches. The weather was cold, but when the sun was out, it was lovely. I lived near Felon Park and where the big park is, and it's a soccer stadium. It's very safe. It's a beautiful country.
Wow.
And I would always, ask some locals like, hey, why are taxes so high? Are you okay with that? And the top tax rate is 55%. It gets up to 55% pretty quick. And the sales tax or VAT taxes are 26%. So the prices are really through the roof. But people would say that they didn't mind paying these taxes because they felt like they get a lot of value and a lot of benefit for those taxes. So they didn't mind. They knew if they got sick, healthcare would be covered. They knew if they lost their job, somehow the state would take care of them. So they felt like it was paying their dues to make sure their future is safe, set, and secure.
Right.
Taxes there are very difficult. Can you hear me?
Yeah.
Yeah, okay. Taxes there are very difficult, but they do them slightly different. So like in the US, the companies send you a double W-2 and a 1099, all that. You have to put that information together. Denmark, like Germany, will get all of that information from different companies. We'll sort of put some numbers together for you, send it to you, and then you have to make sure it's correct and kind of update it. So they take a little bit of the hassle out for you. So when I was there, part of my perks was getting it done, my tax returns, Danish tax returns done for free. So I took advantage of that, but you're probably going to want to find a good tax person and look early because they're very serious about taxes.
Okay. Thank you so much. And I love that personalized insight too. We have another question from Lynette. She's asking, oops, the chat just moved the question down. She's asking, do dividends and capital gains count as part of the standard deduction for being required to file taxes?
Yes, any and all income, when it comes to whether you have to file taxes or not, and you're looking at the standard deduction, you're not married, filing separately or self-employed, then it's all of your income, interest, dividends, rents, capital gains, salaries, K1 partnership interest income, everything and anything pretty much.
Okay, thank you so much. And then let me see if we have any other questions in here before we wrap up. So Julissa says 50 plus here and would love the 411 on how investments, etc., are handled when moving abroad. How does it change at retirement if you are still abroad?
Okay, well, there could be a couple of different aspects to that question, but let me start kind of in general. So in general, you're going to have to report all of that income, no matter where it comes from, investments in the US, investments abroad, etc. If it's investments that you have outside of the United States and you have to pay foreign income tax on that, you can claim the foreign tax credit. Now, the reverse is true as well. Say you're living in Germany and you have investments in the United States. Well, the investments are from there, so you have to pay taxes to the US, and then you should be able to claim a foreign tax credit on your German income tax return. One thing I really want to caution people against is what we call PFICs, or passive foreign investment companies. These are investments that you make in investments like stocks, bonds, securities that are not registered in the United States. They're registered outside the United States, but are like mutual funds, ETFs, unit trust, or any sort of pooled investment. So it's not an investment in one stock, it's like a mutual fund. Those are a nightmare for tax purposes. They're usually not worth the trouble, and you probably want to steer very clear of those.
Okay, thank you so much. And lovely questions from everybody. So I would like to ask you one last question. What's your biggest secret? And I'm asking all the experts of this, by the way, Alan. What's your biggest secret for those looking to make their move abroad in the next year? Any golden nugget you want to leave with folks?
Yeah, and it's not tax related. I would say, you're never gonna know unless you get out there and do it. And the best way to get to know a place is just to step foot in there and spend some time there. So it's one thing to go to some place as a tourist. You're there for just a little bit of time. You're going out every night. You're seeing sights, everything. It's different if you're there renting, buying groceries, getting a car, bringing your kids to school, or going to a job. Just get out there and try it. Find a few places that you're interested in, do a little bit of research, then get your boots in the ground and see what it's really like. Spend a couple of months there, like maybe rent first before you buy to get to know the area.
Totally.
And you know what? You never know unless you get out there and give it a shot. So don't forget about things like taxes. Those always come later. But just find some place that you really enjoy living and has a great lifestyle for you, that makes you happy, and continue enjoying life. And thanks again, Shauna, for having such an amazing summit like this. I'm sure it's really going to open up a lot of eyes for a lot of people.
I appreciate it. And thank you so much, Alan, for sharing all those insights. And I've dropped again the link so you guys could grab the tax prep price estimator from Greenback and then start on your US expat journey. Thank you so much, Alan.
Sure. And if you don't mind me just putting in a quick little plug here for Greenback, our prices are very reasonable. They're always very reasonable. And what we do is we always give you an upfront quote. So you send us all your tax information first. We've got to know what you need before we can quote you. But then we always give you an upfront quote, and we do list our prices online, all of them. They're not always so easy to understand. Some are by form and etc. We do offer consultations. They're $250 per 30 minutes, and a lot of ground can be covered in 30 minutes. And please also remember that our biggest thing is our personal service. Like, you have one dedicated person that you work with that's experienced, that's credentialed. And we're going to be there with you the whole way in case you have any questions.
Awesome. And I have included the link. So if you guys wanted to get in touch with your personalized CPA, you can do that through the link I've shared and get onto a consult. So thanks so much, Alan, and have a good rest of your day.
Okay, thanks, Shauna. Bye.
Awesome.